Good turnaround Tuesday, everybody. Fred Field, don't worry. I'm always here. All right, so we have a busy morning going on. I think Ryan's here who wants to talk about the BOE right away.
About
Kman,
the BOE, good morning.
is there a BOE today?
No, 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 no. It's
Okay,
on
so what's
Thursday, if I'm not mistaken. Thursday.
what's behind the pop and cable?
Better PMIs, not as bad as feared. Employment reports, wages remaining a bit sticky. And market probably a bit short sterling still. So
Yeah,
hoping for weaker numbers so the BOE can cut harder and be more dovish, and they didn't get it. So and the rest, I think, is also if you look at the dollars, market is maybe fearing a bit of a worse report as well, coming out in half an hour.
okay. All right, so EG, does this one-day move affect your view, or is
Yeah.
this a break to buy in EG?
Um, well, I mean, it could have a little bit more to the downside. Tomorrow we have CPI as well in the UK. So
Yeah,
if that remains stickier than the market would like, we could have a bit of a test of that 87 and a half, maybe even
yeah.
down to 87.20. But all in all, I don't think it changes much, but we have to acknowledge that that 87.90 figure is a bit of a tough nut to crack on the euro sterling. So be a bit
Yeah.
careful. I took quite a bit off of my longs, and just running in the next couple of days CPI and the Bank of England with reduced positions and see if I can maybe pick some up lower down.
Okay, new lows for the dollar as a whole.
Yeah.
Euro's lagging, but it's a new recovery high here.
Yeah, it's a bigger. I mean, it's a bigger market, and there's so much going on through euro. All of those crosses in the euro as well,
Yeah,
pushing and pulling different directions. Yeah, but yeah, euro dollar I think is is one of those. Will obviously be on the move on those jobs data today, um, and it looks as if the market is would like to open the top side a little more, if we look at how it trades right now, because through numbers which were not ecstatic, to say the least, in euro, it's still holding up pretty nicely.
yeah, it is. So 120 coming?
Um, if the jobs report is really bad, but it's going to be an absolute mess, because we have those two, October and November, with less details for October, but then November. And if we really have a really bad report, then I would say my main point of focus will be really the unemployment rates, because I mean the rest is could be potentially such a big mess. Those NFPs, those two
Yeah.
months together. So those are going to be the one that I'm really going to focus on. But yeah, I mean, if it's a really bad one, it's probably going to mean that the dollar is going to suffer right into year end.
Yeah, I was thinking when you said you were out of your Aussie yesterday, to
Hmm.
me, when I hear you just getting flat, it's almost a bearish signal.
Well, no. Hey,
No, I mean, because you're getting out. I mean,
I've been
you
I've been wrong more than I would like over my
well,
life,
I think that's how you express bearishness in the Aussie is by
When
being
I'm
out.
not long,
Okay.
when I'm not long something, I'm per definition bearish. Is that it? Yeah. Well.
When you get
Um.
out of your lungs. Uh, anyway,
Yeah.
I thought about that yesterday.
Mm.
So, you have any feel for the wild action in
Well,
metals?
I'm watching a couple of things today, and as I mentioned in the flow show, just going to repeat. I mean, euro should be relatively equal to each side. But I think there's a couple of currencies which I'm going to concentrate on, whether we get a good or a bad report, and looking at
Uh,
how sterling behaves. cable could actually take a leg higher if it's really a bad report today. And on the other side, even though it's relatively the crosses are relatively stable in yen right now, if it's a real good report, which would also be supportive for risk,
Right.
maybe dollar yen could rally back higher. Uh, so yeah,
Yeah.
those are the two main ones that I would look at. And if it's I don't know about the Aussie right now. I mean, I'm leaving it for what it is.
Okay.
But the
It's
Canada is still.
definitely kind of the character of it has changed in the last 4 or 5 trading days from
Mm,
being a leader to the
yeah,
upside to kind of, you know,
yeah.
dogging it a little bit.
Yeah, but the commodities have stopped as well, right? The commodities have stopped rallying. I'm not talking about the metals, but the commodities have stopped rallying, and maybe that's where the Aussie is a bit is a bit on the weaker side. And also, really, I mean, some banks also are starting to anticipate 2 rate hikes in Australia next year. I'm finding that too rich. That's too rich in my opinion. I don't. Bullock is a hawk, but really pushing for hikes, just because of inflation staying a bit sticky. I'm not sure that they will, to be honest.
Okay.
Um,
Just
so yeah,
something
that's
well, I think a lot will have to do with risk, right? I think
yeah,
we held a
good
real
level here, huh?
important, uh, held
Good
a
level here
real,
in the S&P, huh?
yeah, it's 68 on this, but the weekly actually came in at 780. I think I had something at
Yeah,
780. Yeah,
yeah,
there, yeah, the daily 50
yeah. I mean,
comes in right there.
yeah. It's I think it's an interesting zone here on the S&P, and I also quickly mentioned that on our flow show 68, 67, 90, etc., etc. It's a good barometer for risk on the report
Yeah.
that will come out.
Yeah, I hear the road runner coming down the road. Oh, run, Wiley, run. Get to the ledge. You'll be safe there. If you've seen the cartoon.
Mm.
Are some of the younger people here
Oh yeah, but
know the
I mean
road runner and
it's a must, right? It's an
yeah.
obligation to watch it,
Yeah,
and that's a
especially
good
if
reason.
you're
It's a
every
good reason to
bear.
keep the old video cassette players.
Yeah, every bear watches that one because that's
Mm.
how they learn down is faster. Um, anyway, so why don't we bring Blake's
Uh,
here? Ryan's
wait,
out,
wait.
huh?
Greg,
I'm
Ryan's
here.
here. Greg is
Yeah, Ryan's
here.
here.
Oh,
I've got a
oh,
note
you're
down. I've got a late note.
okay. So if I don't see you by like 4:59, I figure you're not here. So anyway, and Greg is here too.
Correct.
Full
All right.
house.
Okay, you guys. Well, Ryan, go ahead. Tell us, what you're doing here with, Euro and cable in front of the number, or what you're looking to do after the number.
Yeah, it's going to be trading after the number. I'm definitely not going to take a position having a guess on what the number's going to be
Come
because
on, man.
it could be
A
an
little,
absolute.
a little roulette. FX roulette.
If I want to gamble, I'll go to down the casino. At least I'll get a free
Yeah,
drink down there.
yeah. So, are these levels important? I think you talked about, maybe we're going to head up towards 118 in
Yeah, I
Euro.
think I think today has the potential. I think as we've been mentioning, we need to see a big number. If that October number comes in down 50 and this one comes in up 50, net it's flat and we
Yeah,
know where we are. So I think if we're talking triple digits for any of these numbers, then we're going to get a move either way. And I think that the way the dollar's been trading at the moment, it's on the soft side. That's the path of least resistance. I think if you get a
yeah,
dollar rally, it's probably likely to be faded. So that's something I may look at. I noticed your dollar yen is bang on your level, Dale. You're one for 54.50. So if you get a rally above 155 again, that might be something I'll look at just to have a little nibble. But I prefer the short side of the dollar at the moment than
yeah.
being long.
Yeah, I thought that U.S. dollar yen might rally into the BOJ. Looks like it's going to be the opposite. So maybe it
Yeah, plenty of days
bottoms
to
on
go.
the cut. You
Yeah,
know.
a few more days to go into
Yeah.
that, and that's what I think. Yeah, I think that we could have a rally if this data is really good, but I think that, as I say, that might get sold. So dollar CAD, I'm still looking at. That's probably the main one I'm looking at. It's still hovering above the triple bottom, where your black line is down there. And I think if we get through this data and we haven't broken it, or we've broken it and got back above, I think I might try a bit of a long off that line.
It on the 4 hour, even at new lows, if they make new lows and go this black line, it's not going to confirm.
Yeah.
If that for another, 30 pips, it's not going to take out these readings. All right, buddy. Well, thanks for sharing.
No problem, mate. The first question you got to ask Grega is if he's sobered up yet.
Yeah, are you okay, Grega?
Yeah, I'm here. I'm okay.
All right.
I'm not really sure how Ryan got home either. So because I know
All
he
right.
was like till 9 or something. So
Okay.
or maybe
All
he's
right.
still somewhere around Liverpool station.
Slipped in a box.
All right, brother. So I'll give you the screen.
Yeah.
By the way, I don't know if everybody understands what these guys are joking around about. Grega, you were in London and you got to meet up with Ryan,
Yeah.
Michael Brown from Pepperstone, MRBH from our chat room. Who else did you guys get to all hang out with? And I saw all the pictures. And I saw the debauchery. I saw that you guys went to a strip club afterwards and hung out with naked women. I'm just kidding. I didn't see any of that. But I saw that you guys got to hang out, and I think that's really cool how our community got to hang out together. So
And the most important is that Brown got the Elliott Wave book because he loves it so much. So
yeah.
how did Michael Brown feel about your Hocus Pocus Elliott Wave book that you gave?
he was a bit speechless.
I love Michael. If you're listening in, I hope you read that over the holidays.
He said he will. So, okay. So, regarding, dollar, if we start with the dollar, I still think that more weakness there is coming, but with such a lot of events still in front of us, I just think that maybe there will be some rallies before we see further weakness. I'm still looking at this gap, which maybe not a lot of traders are watching at from October 10, so that was around 97.70. So looks like that this could be filled here on dollar index, and maybe then we get some rebound. But I still think that whenever looking across different charts and markets, I just think that whenever we get some rebound on the dollar, this could be opportunity on other markets to jump in. And I still think that commodity currencies in general are very strong. I will personally keep an eye on dollar CAD. We broke out of this downward channel pretty aggressively here, and looks like that there is a lot of room for weakness. I think that we will see a retest of these June lows. Of course, there could be some rallies, and if we get one, I would be watching that very nice resistance around 138.70. So dollar CAD is definitely on my watch list. Now, depends on the data. If data suddenly gets strong and the dollar would rally with the US yields, then something is very clear, is that most likely Bitcoin, which is still very, very weak, will continue to the downside. So I just think that that's one thing that, at least on my charts, seems like very clear. It's a very clear downtrend. It cannot find a lot of buyers despite very nice rebound that we have seen recently on stocks. So that's for Bitcoin. But when looking at stocks here, I still think that even if we get some sell-off here after the data, the question is, what should happen to see the sell-off on stocks. Maybe the data should be very, very bad. And then at some point we will get a sell-off, but afterwards, based on cut expectations, we would expect that stocks would stabilize. So I would also be watching further dips and then a later rebound on stocks. I mean, the wave count itself is also quite clear and directional. In my opinion, we had seen a bottom and a completed wave 4 down here. We broke this trend line resistance, retested it. So if we get even another short-term decline here, I would expect that market ahead of next important US CPI will be out tomorrow or on Thursday. So that's when I would expect that again market would stabilize, slow down, and then we get some push higher later on. So overall, I just think that we are having a pretty nice risk on flows here, and if we get some dollar rally, that could be opportunities, as I said, on some of the other currencies. Like cable is also looking quite good, but of course it's running into some kind of a resistance here ahead of UK CPI and then Bank of England rate decision on Thursday. But if we see some dip, I think that there can be opportunity for more upside. Maybe the UK CPI could cause this decline, and then maybe they will have only one cut or something, and we will continue higher later on. So after this kind of a correction here, I certainly think that this one is also looking quite nice while we are trading here and holding above 1.3200 level.
How about US dollar yen, Grega, going into the BOJ?
I mean, here with hawkish BOJ, of course, and with what's investors expect from the Fed, it's not a surprise that we are seeing some correction here on this pair. And I think that this correction has room to correct further. I am comparing the current correction with the previous one. So I think that there is room for 152, 153 area, but not really sure if that's the perfect time to continue or turn bearish. It's still somehow, despite the fact that we are at the upper side of the range, I would rather see a spike above that resistance that was from January of this year, before market may eventually turn bearish. So in the near term, or at least till Friday, I see chances the dollar yen will correct towards lower levels here within this wave 4.
Okay.
So that's basically are the main markets that I'm tracking. Maybe euro dollar is also moving into some resistance here, but the overall picture still, in my opinion, shows that we are in a triangle, and that these highs from September's are yet to be retested before this bull run may come to an end. And of course, the ECB is definitely not in the same spot like Fed, and this could keep maybe after some pullback euro dollar here in uptrend. So if we get some pullbacks like wave E at the same time when dollar index could maybe rally away from that 97.70, well, that could provide some nice opportunities there.
You know, you have your wave E at like 116. I mean, that's from where we currently sit, that's pretty far away. In my opinion, I'm not saying that we can't go there, but that's 170 pips away from where we currently
trade.
trade.
I mean, with a lot of data in front of us, and we are still at the upper side of the range, not really breaking out of the range. Well, we still, maybe if we get some retracement, it would not be basically a surprise either. So.
Well, you know, so let's talk about today's jobs data, Grega, and you know, and we can Ryan, you can chime in, and Steve, Kman, you know, Dale, whatever. Just today's data. I mean, the market's expecting 50,000 jobs. There's a good chance that we're going to have a positive number, whether it's 40,000, whether it's 80,000, whether it's 20,000. It's going to be a positive number, and if it's beyond expectations, which, you know, betting against the U.S. economy the last couple of years have been a really difficult task. So let's say the data comes in decent. It's kind of a, you know, let's say it's a wash and it comes in at 50,000 jobs. The dollar is going to have a recovery, but I think it's going to be very short-lived because of what Powell said, that we have to factor in that that there's 60,000 job losses behind that number. And so any type of bounce that you see in the dollar index, I think is going to get bought today, as long as the number's not, super, crazy. So like if we have let's say the number comes in, we create 50,000 jobs. We might get a little bit of a relief in the euro, but I think you have to be stepping in to buy it right after that. 116 seems like pretty far away. But what do you guys think about that, Ryan? What are your thoughts there?
Yeah, pretty much as I've been saying. You've got to look at what the market's been doing going into the number. And the market's been selling the dollar. And I think anything around about the number that's expected, I think, the market's not going to pay a blind bit of notice to, and you might as well call it Christmas. But I think more importantly, the unemployment rate number could have a bit more significance. Let's say October's down 200 and this month's up 200. Well, net it's flat. But if unemployment goes to, 4.7% or higher, something like that, that's what the market's going to pay attention to. So you really need to read this number, each part of this number, and decide, is that market moving? Is it not market moving? Does it mean a change by the Fed? Does it not mean a change by the Fed? And look at it in that context.
Got it. So Grega, first of all, thank you for your views. Great to have you here. And if you guys don't know, just, when you're utilizing Forex Analytics, you can go over to the Elliott Wave tab, and he updates all 30 instruments, with his charts every single day for all the instruments that we cover, which is not just FX. I mean, we have crude oil. You can see gold right here. We've got silver, Bitcoin, boons, 10 years. So we got a lot of different instruments that Greg is looking at, and we are looking at it just in general. So Greg, thank you so much for your analysis. Now, Kman, what do you think about today's data, and how should we trade it if it is a good number? If it's good, do you think we're gonna get a snapback dollar, like if the dollar bounces, do we sell into it? Basically, is what I'm asking.
Selectively. As I said, I'd rather buy, if it's a good number, I'd rather buy a cable dip today, today, than for instance, selling a dollar yen rally. So it's going to be very selective for me. I think if the number is really good, probably cable, euro, dollar, maybe the metals too. In a certain way, they could find more rapidly support versus the dollar. If it's a good number, but again, my main focus is more than the NFP numbers, which could be extremely messy due to that October number as well. I'm rather going to focus on the unemployment rate, just for the viability of any move, But it is overall the dollar is rather on the defensive. So I guess the impact that we may see from a negative number is going to be bigger and might be longer lasting than the impact that we get from a better number.
I'd agree with that. Steve, we've seen gold has given us a couple of looks now at, you guys can see we had this range. We did a range extension. Dale knows this, and most of you all know this, horseshoes and hand grenades and technical analysis, all that shit works. It's close enough, I get close to you with a grenade, I'm going to kill you. It's same thing with technical analysis. You have a range extension where we got really close to it. I think you could say that completed. But Steve, you can see we've retested the breakout point multiple times. We've given you like 2 different looks already. Do you play gold to the long side here? Does it actually break out? What are your thoughts?
We need to keep respecting the bullish side, of course. There is absolutely no indication that we should be doing anything else. This has been a very bullish market. Every dip has been bought either immediately or very fast. So, I mean, what else is there to add? Obviously, silver is the one that's shining brighter for quite some time now. And it is to be expected after the breakthrough 50, which the market was waiting for decades. Obviously, that has, given silver a very different dynamic. Nevertheless, I think that gold is also still capable of new highs.
Yeah, I mean, and gold might be playing some catch up, maybe alongside platinum and palladium, which both all look like they're basing and they're about ready to go again. All right, we have
Palladium would be my last choice, but silver and platinum, yeah, for sure.
All right, very good. And platinum, you can see, is new highs for the year here over the last couple of sessions. Thanks, Steve. We're going to get ready for this data and for the release. Dale, any last minute thoughts before we go into our data release here?
Yeah, pay attention to that 6,800 level. I think it's a trap door. Maybe it does lead to the bottom of 4 like Grega was showing, but
are you talking about the S&P? So you want to be on the short side of the S&P here?
Well, I am short semiconductors. So,
okay.
I'm short. I think we'll get a bounce, but if we take out 6,800, I think it's a trap door. I don't know where the next support level is.
Okay.
Could be retest of 6,500. When everyone's away, everyone's
for now,
gone.
we've created a lower high, so that's working in your favor there.
Yeah, we'll see.
All right. By the way, guys, I don't know if you've seen this, and I know, Ryan, you talked about the Canadian earlier. This thing can't get out of its own way. I mean, how bearish does this CAD look? And there's that level you were just talking about. I think everybody should be focused on it. This 137.25 level. That level breaks. It could be pretty interesting. This dollar CAD, like anybody who's been trying to buy the dip in the dollar CAD has gotten smashed. I mean, that's just it's just simple. All right, I'm going to get us ready for the day or for the data. So I'm just going to go to Forex Analytics, go over here to calendar, grab the data flash. We have obviously a lot of data coming out here momentarily. It's a mixture of data between October and November data that we're going to be focused on. We also have retail sales. Let's not forget about that. I'm going to pull up, several different charts that I'm going to do it on my other screen and bring it over. I'll have the U.S. dollar, the 10-year, also the S&P. Let me bring that over here. Okay, so we have the S&P. Here's a 15-minute chart right in the middle. Let me get that. There we go. There's the S&P. Let's put the 10-year over here on the right.
Don't forget the comet is going to be the closest to Earth on the 19th. Is your mom told you about it?
No, is that the A1?
Yeah,
whatever it's called.
The interstellar body.
Yes. Maybe that it's speeding up and slowing down all at the same time.
And spinning.
Okay. Well, that's something that
like my
definitely
head.
Be worried. It's going to be top of mind, Dale. It's going to be top of mind.
Just wanted
Look, if an asteroid hits us, we're all dead anyway, so I don't give a shit. Like lights out for everybody, guys. So
the dip.
all right, dollar index to the left, S&P right in the middle, and 10-year right here, and then we got just a minute before the data comes out. Ryan, any last minute thoughts?
Last words.
Yeah, don't eat yellow snow.
No, don't eat yellow snow. Got it. It's 80 degrees here, so I won't be eating any yellow snow. Kman, any last minute thoughts?
Nothing more than I have said. Don't do what I wouldn't do.
All right, then don't eat yellow snow with Kman. All right, Grega, any last minute thoughts here, bud?
Yeah, if we get dollar rebound, sell it later.
All right, I'm going to be doing that within 5 minutes of a dollar rebound if we see it. So that's my last minute thoughts. Steve, Dale, sorry we are out of time. Well, no, we're not. Steve, any last minute thoughts?
No, it's okay, mate.
Okay, Dale.
Yeah, I think we'll get that pullback Greg is looking for.
All right, we're going to look for good, strong data. Remember, we want a jobs report. Forecast is about 50,000 jobs is from what I'm reading, even though it doesn't show up here on the data flash. But here we go.
64.
It's a good number.
See?
But the dollar
Yeah,
is.
but the unemployment rate 4.6.
Yeah, 4.6.
4.6.
Oh, there goes the
Participation
dollar.
rate went up as well, so it's a bit mixed.
All right. Well,
They're
you know.
hitting the dollar pretty good. Now it's got a
Oh,
tail.
come on. I got a shit fill. Oh, God, I hate it when that happens. All right.
All right,
Well,
everything's fading. Yields are down pretty good.
yields are dropping. Yep. Yep. I mean, this
Retail
is,
sales were flat, but takeoff autos and gas, and they were up, and the control group was up, so that's healthy. Yeah,
gold's
wages were a little bit softer. It's not horrendous data. It's not falling off a cliff. It's still soft as we've been seeing before. I don't know what the October number was. I can't find it anywhere.
Well, this is
it
that
was down
unemployment rate is not
105,000.
pretty. I'm
It
sorry.
was down 105. The October number.
Oh, down 105. Why don't you tack another 60,000 on top of that, Mr. Jerome Powell? So we lost 165,000 jobs. Amazing, amazeballs. That's why the euro is closing in on 117 right now, guys. I mean, here we go with the euro. We will complete that flag pattern in about 10 pips or so, and. Yeah, well, I picked up the euro. I got a really shitty feel, but it's still positive, so still moving. All right, well, Dale, I know you have Mr. George
Robertson.
I don't know George's last name. Brick and Battle, right?
Yeah,
So Robertson. So is he here? Did you find him? Oh.
Yeah, he's ready to go.
He is. Oh, he is here. Okay, great. All right, well then, let me just say this. Grega, I'm sorry I missed you in London. I can't wait to be able to meet you in person since we've been working together nearly 8 years now. I hope, thanks you for being here. Steve, always appreciate you. Same with you, Ryan and Kman, and Dale, of course. And Dale, I hope you have a great interview. Guys, we're going to be back. The next 2 days are going to be really busy, especially on Thursday with CPI. So make sure you're here. We'll be here. And so we'll see you then, and make sure you stick around for this interview with Dale.
Thanks, Blake.
Cheers, guys.
Hey, thank you, guys. Grega, thank you.
Thank you.
Thank
Bye-bye.
you. Ryan, thank you.
Yes.
Nice call. Prep people pretty good. I don't think there were too many dollar bulls except me here today. So, okay, George, how are you?
Yeah, pretty
to have
good.
you
You hear
back.
me okay?
Yeah, I hear you loud and clear. So,
Great.
it's
I
good
got
to have you
about,
back.
Yeah,
Go ahead.
I got about 5 slides I want to share with you. So
Okay.
I've always stumble here. How do I share? Oh, there it is. I see it.
It's at the
Okay.
bottom of the screen, George.
Yeah, got it.
Okay.
We're all set.
Market's still 40% overvalued.
Come on, let's not get crazy. I'd say only 30%.
Okay.
What I want to do here, Dale, is I've paid a really hefty charge for an education over the last 3-4 months. You would figure after 40 odd years, you wouldn't have any more to learn, but that's not the case.
I'm okay. Here you go.
I'd like to share that with folks so that maybe some of the loss can be lessened. But the down and out of it all is that we are perhaps in the biggest dislocation between fundamental economics, the actual steam engine, nuts and bolts machinery that powers corporate profit that I've ever experienced. People are just blithely ignoring the actual flow of funds, the ins and outs of what's happening, and it's going to lead to not just the current overvaluation in the equity market, but it's going to lead to a response to fix this that should be a crash. In fact, I'm pretty certain it's be a crash. Anyway, I've bet a lot on this. It first started appearing on my radar screen about August, September. That's when we last spoke, and I've kept at it. I'm not a good technician. I'm certainly nobody's gonna hire me as a day trader anytime soon. But I have been in the past quite a successful portfolio manager and a long-term macro.
Yeah, you were bullish all the way up, George. I read your stuff, and when
Yeah.
you came in, and you know, you couldn't. There was not a bearish bone in your body when we first started talking.
Yeah, and that all changed
When
as
after the election,
after the election, immediately after the election, Trump has just basically, as far as risk goes, raised the risk untenable levels because of his assault on the U.S. Constitution in terms of the ways and means of how government policy has been decided upon and then implemented. Now, this could be good or bad. I don't think it bears any sort of political discussion.
so
We
it's
could
not
be here all
political.
day.
You thought that it was going to have a deleterious effect on the economy
Yeah,
from
and
the
it
top.
has. It's without a doubt. It's done one of the biggest flips in the U.S. Federal government support or input into the U.S. economy that I've ever experienced, nor can I find, but at times of war or pestilence or plague like COVID, or exogenous shocks or shocks like the GFC in 08, 09. We've never had anything like this in a peacetime, sort of a non-eventful era. Trump has gone out and shocked the economy like no one has ever shocked it before, and not in a good way. And this isn't an
Well,
opinion.
Smoot-Hawley
Yeah.
shocked it.
Pardon?
Smoot-Hawley shocked the economy 100 years ago.
Well, you could say that, but at those points there's always some contention, some friction, and Trump just came into the blue in a rather peaceful economy. But maybe it was sort of a little banal or not understandable, or understandable and boring for a lot of people. But it was basically one of the most easily read economic settings that we've ever had. And Trump decided to just, as you said prior in terms of technical analysis, throw a hand grenade into the room. Why? It just seems pick your reasons. It beats me.
Okay.
But it is profound and it's very large.
Do you think this
unnoticed.
detachment, like that you believe it is, the market's detached from reality, is because people really don't even know the reality, even the
Yes,
players, like in private credit,
absolutely, Dale.
shadow
And I
banking.
think that I think, and we haven't chatted before this conversation, so you're not throwing me a softball with intent. What happened was, the way I put it is that when the Fed moved to forward expectations, rather than just be a reactionary monetary policy where, something would happen and the Fed would respond as expected pretty well almost immediately. So therefore, economic data and input really mattered. You had to know employment. You had to know this. You had to know that. You had to watch it carefully because that is what the Fed would do based upon the reaction function. The Fed just radically changed everything after the GFC to where they thought that a long-term guidance, as they called it, and they did call it this, I'm not making it up, Delphic and Odyssean Fed monetary policy, where they could shape and nudge and cajole and propaganda what will happen in the future instead of having to be a reactionary a function, an immediate. Well, that might have been the right thing to do. It's certainly all we're doing now. But what it did do is it turned the market more and more till now it's just raging into nothing but a sentiment market. It doesn't matter what the reality is here and now. Like today's 69,000 plus non-farm payroll, but ignore that man behind the screen with the 105,000 plunge in October. That's a net 40,000 for 2 months, which is 20,000 a month. That's recessionary numbers.
Yeah.
And so this will be ignored because the Fed will not respond to it. In the past, and I'm talking like an old fart, like 10 years ago in the past, that number would have elicited an immediate drop in Fed funds and a huge liquidity provision into the economy, because the Fed would have read this as like risking or actually has entered a recession. Now they don't do that. They just jawbone and babble and we're going to vote here, we're going to vote there. What do you think, Mirren? What do you think, this guy, that guy? And there's no definitive for right or wrong response from the Fed. So therefore, there's nothing to base yourself upon in terms of fundamental economics until it really is just like it hits you like a brick on the head. And the brick on the head has yet to happen to the market. So the market is like having a happy time with respect, just technical analysis or just surmise and good stories. So AI is going to change the world and raise productivity 5 points. Trump is going to have revenue coming in.
The AI trade's under some pressure now.
Yeah, well, the AI trade is not just under pressure. It's my read of the AI trade is that there's about 5 or 6 guys who are far richer than you and I who realize that if they don't grab the AI, they're going to lose their leadership or even their placement in the top 5. So it is not really an investment in terms of like, okay, we're going to invest this money because we're going to expect this return. They realize that only one is going to emerge as the owner and implementer and leadership in AI. So Sam Altman realized this right away about a couple of years ago. So it is worth their while to put all in it. They put in an aggregate of about at least $1 trillion, if not more, with the idea that the financing that's required is going to roll out over 5 years, 3 years of implementation, and only one is going to realize a return. All the others who are doing it right now are going to be total loss. So if you're Amazon, I guess, well, you're gonna still go out and sell widgets and cell phones and stuff, so you're gonna make it. If you're Google, you still have Chrome, so you're gonna make it.
So are you going to get long this market?
No, not a chance in hell. What's going to happen? What I'm talking about is of that $1.5 trillion. Let's say it's $1 trillion because it's a round number and easy to talk about. 80% of it is a write-off, and all these players know it's a write-off. The street should know it's a write-off, but everybody in the street is compartmentalized into studying only one company or one entity or one group. So they think there's a reasonable chance that their group will make it. So rather than look at the whole AI industry as a total and say, okay, yeah, it is good stuff, there's no doubt about it, but only 20% of this capital is going to have a return, as big as it might be. 80% of it is just a write-off, and that means that in aggregate, it's going to be 2-3 years for the whole economy to repair this blow. This is a serious blow, and we're talking about like I don't think just off the cuff. I don't think Sam Altman. I think is just getting his head kicked in by Google. And that
didn't he go to the White House and ask for federal guarantees on
the guy is no fool. He sort of realized that he could be a total loss, and I think he's a write-off, and that's just a subjective call. And so he started to go, well, I better get the government on my side, because that way I can hold Google at bay. Because he probably knew about 2-3 quarters ago that where Google was and where they're going. So he joined up with, did that Oracle, NVIDIA,
Yeah.
OpenAI daisy chain, sort of phantom funding. And went to the White House and said, look, I need a $1 trillion backstop so I don't end up like Continental Bank. But well, I guess people wouldn't even remember that. I wouldn't.
I do.
Yeah, they won't. He won't be get to that position. So he'll have the government as his partner, which will be pretty good to do to have when you're a total write-off. But the government is coming through with regulation. That's what Trump did last week. With an executive order, such that the federal government is going to take over all AI regulation, which means from what our experience to date means that whoever's going to pay the most to Don Jr. and Eric will have the government on their side in terms of regulation. And that looks like it's Sam Altman is trying to get to that role. Okay. Meanwhile, Google is just, saying, yeah, I think that that outfit in China showed us that it's really not all that complex, and NVIDIA does not have a monopoly on the required chips. So we're just going to get together with some old friends, and we're going to make an adequate chip to make the leading AI contender at this point, which is, I think, is what's happened. So, to my reading, and this is just probably naive. That puts NVIDIA at about maybe down 30, 50, 60%, 70%. I don't know. Well, it doesn't matter. It's just a lot. And it puts Google probably holding its own, if not coming up. But it's similar to the way Amazon and Google were going into the .com.
Well, you know what's different since you and I last talked is that not even the Mag 7 can you talk about them as one group. Because there's even bifurcation within that now.
Yeah, so, they have a pairwise correlation. You know how they trade off each other of 1 to, or they did have it 1 to 1. So they trade as if they're one corporation, but they're definitely not. They're in a race to, they're a cage match. It's Mad Max. 5 guys entered the cage, and only 1 guy's going to emerge.
Can I remind you, George, as like maybe someone who pays attention to what you say, is that originally
well,
when you were
I hope I haven't cost you as much as it's cost me, Dale.
Well, I'm just going to remind you, your original plan was to come in and trade the Canadian dollar. It wasn't it wasn't to get short the market.
Yeah, woulda, coulda, shoulda, huh?
I'm just saying, sometimes your original thought is your best thought.
Yeah, it definitely was. As far as the trading goes, it definitely was. But I'm still chipper and confident that
can you still play? Can you still play the game?
Oh yeah, I've put all I thought I had available into short S&P and JP Morgan. That's when we last spoke. I did it with positive convexity. Well, I lost every cent. And then I decided, I went back and over and over and over and over everything what I'd like to show you here. And I came back with this is a once in a 40-year opportunity. So I'm going to keep the money that are required to make sure that I can live in peace for the next 20, 30 years. But I'm gonna leverage up. I'm gonna go out and borrow to put a speculative trade on. Probably a bad idea, but that's how I feel. And
hey, buddy.
Yeah.
What do you think is going to be the trigger? We never know.
I think it's as we last spoke. We don't really know. If it's usually stupid to go back to your past experiences because stuff doesn't rhyme. It doesn't repeat. It's like, wow, it's got to be a shock.
There is a wall of debt of refinancing that happens in 2026, the first half of the year.
Yeah,
if you look at a graph, there's no year like it.
The government, the Treasury, starting in Biden, and then Besant has kept it up. has flipped a huge proportion into U.S. Treasuries rolling versus you know, rather measured 5-year, 10-year, 30-year. Now, one way to look at that is that that's just asking for trouble, because when they try to finance, they won't be able to, and you know, death and destruction, and that will be your shock. I don't think so, though. I think the U.S. with its 60 trillion, 100 trillion, it's a matter of organization and ability to implement, but it's an unquestionably risk-free credit. So it really doesn't matter whether the U.S. government finances itself just for an illustration on a 1-week roll, or whether it's nothing but 30-year zeros. It for the U.S. and only for the U.S. it doesn't matter. It's pretty exciting though, and it will create a lot of sentiment and reaction. But in this movement to treasuries will become a focus. But I don't think it's a problem in the end. If anything, I think it would just be an opportunity. It might bring about what I'm seeking, which is some catalyst that will bring the market down significantly, in which case that will be an added frosting to the cake for me, and it might be the opportunity to actually come back in and go long. But you know, that's just there'll be happy times if that comes about.
Okay.
What I
All
think
right.
is going to
So
come about.
what do these charts mean that
Okay,
you
well,
brought, these slides?
If you have in front of you, you have fiscal impulse rolling annual cumulative. What is that? You can see that it's in billions. So 3,000 is 3 trillion.
Okay.
Right now, that's about 1% of GDP. Three times our, excuse me, about 10%. So you can see that as we got into COVID, the amount of money that the government was pumping into the economy was, as you know, hopefully would happen, was a hell of a lot. It was a record, $4 trillion net. Now this is net numbers. So every day there's an incremental increase, so that the year's total was 4 trillion in just at the beginning first quarter of 2021 at its peak. Then we had things calm down. It wasn't as dire as we thought, and the government backed off until 2022, where it reached a low of $1 trillion. If you remember, 2022, the stock market took a pause. If it actually traded down, people were talking recession, all that stuff. But what it really was that the government's excess spend, turned into something more reasonable or more on trend, which was the trillion. Now Biden's got an election that he's got to win, so he turns around and does green financing and all sorts of stuff, industrial policy, and gooses that back up to 2.25 trillion. This is by the middle of second quarter of 2023, and then since then it's sort of like it's a lot less noisy than what this picture might depict, but it sort of stayed along 1.5 to 2 trillion bucks rolling annual. That means following, like if you looked at the last year day by day.
What's that last big drop, QT?
Yeah, and then what we get into is that the Trump regime starts in 2024-12, and people are, he's talking a lot about he starts to impound money. He starts to, like, I'm not going to send any money to the National Institute of Health and blah blah blah, all this crazy talk. And it was really small change, but it was a drop of about 500 billion into the economy on a rolling annual. And then when we hit Liberation Day, you can see it. There it is, 2025-04.
Yeah.
The Liberation Day tariffs kick in, and we have dropped out. It's just like.
So we need so the market needs to revert to the mean, and even if this bounces, there should be some kind of reversion here.
It's unlikely to bounce. If I can just show the backing to this. Okay, what the hell is this? This is the annualized. Now we're going forward. That means that if the current pace of tariffs keep on for the next year from where they are now, in April, it was a jump from 115 billion a year to 209 billion. Then May was 287 billion. And then the last one was, so the highest was in October, was 410 billion. And this is a number, by the way, that F.A.C.E comes up with too. We had 100 billion prior, 410 billion now expected. So that's 300 billion that F.A.C.E himself and most people are saying will be the tariff number going forward if it's maintained. It's dipped a little bit, but we only have a partial, we haven't gotten the big 26 billion per month number yet, but it looks like it's on track to be maintained around 380 to 420 billion in December. This is not revenue. This is the goofiest thing. I don't understand how the hell people accept this rubbish. This is the tax in the main on corporations.
Yeah.
Corporations pay for this. Costco pays it. Various steel importers pay it. Anybody,
and they pass it on to consumers, or eat
pass
it.
it on to consumers, or they eat it.
Yeah.
And I'll show a picture that they are eating it. Their margins are being greatly decreased. But this is one of the largest increases in corporate tax, because that's what this is, that the U.S. has ever had. It's never had it before. And people just blithely go on, they take this rubbish that it's revenue, that, he's made a golden age. I don't know, maybe this will motivate Ford to stop importing anything from Mexico. Maybe Costco will only do with U.S. Industry, but that will be such a huge increase in prices that will have an adverse effect.
Yeah, people aren't going to be able to buy them. First, they could, their car payment's like a mortgage payment now.
Yeah. So without a fact, I mean, there's just no debate in this. I can go talk.
There are lots of tail. So here we go. Here's the takeaway. There's all these tailwinds that the market keeps forging ahead into.
Well,
and now the Fed is going to try and reignite things.
It's like let's keep up with analogies here. It's not tailwinds. It's like what a nice day. Why don't we go out for a stroll? And you're walking into the winds of a hurricane.
Yeah. Headwinds.
And people call you and say, well, what the hell's going on? You say, oh, it's beautiful. But it's beautiful. It's going to be fantastic. We're going to get the eye over and it's going to be brilliant blue sky. It is the goofiest, craziest dislocation from the macroeconomic scene to asset valuation. I can't find another one like this. It's really, it's pretty crazy. Now let's see, what does that mean for equity? Well, this is the equity market that we know. S&P 500 level, $5,600, 5,600 back. Here we go. Here we're just coming out of the Trump Liberation Day sell-off in April, May.
Yeah.
And then we've carried on. We're down now again, but it's like it's at such a level that people just ridicule me. I'm just an idiot. And perhaps I will be, but I don't think so. I'll show you why. And we're right. It's a phenomenal market. This itself is incredible. And I would be, even if I was the most bullish, fundamentalist, technical guy, boy, I'd be careful in making a bull call here.
So what's NGDP? And we'll wrap it with this
that's
slide.
Nominal. That's not, I hate using time as a way to calibrate, how things roll out. So I use usually either a variable that explains things to me. And for this is the economy. This is GDP. I say nominal GDP because this is current dollars. It's not real like the Atlanta Fed. So here we are up to 7,000 area, just below it. And in terms of like per GDP increase, and of course the GDP's got to increase to have this type of market, but this is the biggest massive like increase in S&P 500 level per increase of GDP, the US economy, that I think we've ever had in our lifetimes. I can't find another one like this. It dwarfs 29, to put in perspective. Now that itself just, it sounds good, but what does it mean?
You know what it means? It will remain a mystery until it
No,
becomes until it becomes history.
No,
it
means
it
that
will remain
okay.
a mystery until it becomes history.
I'll go with it. But I think what it will mean is that there is no such thing as cold water fusion. Remember those two guys who figured out how to get a nuclear reactor out of cold water, tap water?
Right.
And there's no such thing as perpetual motion, and this can't last. Now let's try to figure out why it can't last. Corporate profits have something to do with S&P value.
Yes, a little bit.
Yeah.
Kramer calls it the mother's milk.
Right. Well,
right. So I need to know, George, were you breastfed as a baby?
Only my shrink is allowed to ask that question.
All right, buddy. I
Okay.
thought that would have been, maybe a reason for.
but this is corporate.
All right. Yeah.
Come on. Let me cut to the chase here. This is corporate profit as measured by the Bureau of Economic Analysis. And in fact, it's from what's called the NIPA Table 6. The table is income and profit for all of the United States. So this isn't just the FAB7. This isn't just one component. This is everything from the local dry cleaner to anybody who's put together an LLC or a corporation or incorporated. And it got up to about just shy of 3.3 trillion a year annualized. Now this is current. This isn't rolling or annualized looking forward. This is just that if we take the last measurement and annualize it, this is what we were at. We're at 3.3 trillion. And you can see that, once we hit Trump, it just comes to a stop. Maybe it's just investment and, he's got to break eggs and this is going to go back up like this because of the brilliancy, just how brilliant Trump policy is. But anyway, for a good 9 months now, it's just come to a stop. And that the red dot's where we are. But this is after tax, and it's only as of April. It doesn't include the tariffs as tax. So if we include the tariffs at tax, we have it go up to like, it's plunging. Now it has dropped this much before, but notice that the last time it dropped here was in the COVID or 2022, or into the GFC of 08-09. This is a serious drop that at least requires, consideration. If not, it's a clear signal that the party's over. Trump has to not only, with his policy, change this to back to where like the 3.5, but he has to change it by about we're getting into about 750 billion, 800 billion, which by the way is not far from what he's done to the economy in terms of fiscal drop. It's all coming together. Knee bones connected to the thigh bone, all that stuff. Now, if we graph this to S&P 500, this is corporate profit down here, adjusted for tariffs. We have had this type of pattern in the past, but the market always responded. Here's COVID and there, and it always dropped down, and then it came back up as it saw all clear and so on. But here, not only have we had a very rich S&P 500 level, this is all the AI stuff. For the most part, it's all FAB7, Magnificent 7, or what we're supposed to call it. Here we have the Trump liberation, which is a drop from you know, the 6,000 down
April.
to low, yeah, 4,800. And then you know, hey, it's all fine. This is revenue. This is fantastic. All this amazing, just uncritical acceptance of everything that's been going down. You know, Altman and everyone, you know, they have a vested interest to say AI is going to change the world as we know it. It might, but only one company will. And then it's just done a button hook, so that probably in relationship to the driver of the S&P 500 in the end, it's probably at the richest level in relationship to this that I've ever experienced, and anyone looking at this has ever experienced. And I think it's like a sure shot that this is going to go to at least back under 6,000 to this area between 5,200 to, you know, 5,500, where people start to, you know, reappraise Trump's policy and yeah, it is good and everything, and then onwards. If not back down to 4,000 or so. And then if it does drop down toward this 4,000 area, that means that you know, shock and awe, to say the least, dismay and horror, or fear and loathing, take your pick. It's probably going to go much lower. It's going to have momentum there. There's going to be some massive damage done to, you know, somebody gets caught in the crosshairs there. Bitcoin's going to disappear off the face of the earth. You know, it's great fun to talk about this stuff. But I see it as a risk. Now going just back to risk reward. This is the greatest opportunity from a short point of view that I have ever recognized. Now that doesn't mean that this can't go onwards and upwards, but as long as it goes onwards and upwards with this button hook pattern, I'm going to be very comfortable with the idea that sooner or later we're going to see like 4,000 or 3,000 or something.
Okay, real excellent presentation, bro. We're nice presentation.
Thank you.
We're 7 minutes over, and now I understand. And you know, I've been buying puts in semiconductors, and NVIDIA looks like 150 coming, and Broadcom got hammered Friday, so maybe this is it. I think at least maybe for, you know, 6,300. That's not really not asking for a lot.
If we reach that, I think we got what the hell does Soros call it? Dynamics or something. Anyway,
It'll feed on itself.
Yeah, that itself is a significant event that will lead to the next level, and so on, and it won't stop until no more damage is possible. I'm sort of very excited. Meanwhile, though, I have money bunkered aside so that if the risk manager does a full audit on me in, say, March of next year, I'll at least survive. And anyone who takes this as their sole input and trades off is a jackass.
Do your own due diligence, know what your risk tolerance is, all of that. First of all, make sure it's risk capital, and that's not your mortgage money or your grocery money. Okay, and if you can't live without that money, imagine funding an account with 20 grand. Imagine striking a match and lighting up that check. And if that bothers you, that's not risk capital.
That might give you enough pleasure to be worth it, but I don't think so.
Yeah. All right, buddy. Always great catching up with you. I hope you have a Merry Christmas, George.
Okay, well, I think it's gonna be miserable, Dale, but as you can see, I'm sort of cheerful, and that might just be,
you are. You have a great attitude, and that's 90% of it.
Yeah. All right, well, I hope you're right, but
and you have stuff on Substack, right? You have your own Substack.
Yeah, I'm gonna this chat here. I'm gonna I've sort of been kicked in the head a bit, so I've gone quiet in the Substack. But I'm going to use this chat as the basis for the monetary fund posting that I'll start to write up as soon as we get off this.
Okay, brother. George Bickerson, everyone. Follow him at Bicker and Brattle on X.
Bickering Brattle. That's that. And if you like my stuff, please subscribe to my Substack, which has the incredibly expensive charge of $10 a month. So
Oh my
there you
God, you'd have to give up going to McDonald's once. Yeah. All right, George. I root for you.
Always a pleasure,
I'm-
Dale, and I hope I'm around for you to talk to me in 3 months if you want to.
All right. Well, God willing, I hope we both are.
Yeah.
And that everyone listening to us too.
Yeah.
Okay,
God
bro?
bless, Dale. God
All
bless.
right. Same to you, George. Okay,
Okay, sir.
everyone. That's a wrap for Turnaround Tuesday. Looks like the dollar reversed. So I'm
Yep.
going to get back to the markets. Everyone have a great day. If you can join the team in 5 minutes on the morning edge. Don't just count your dot plots, count your blessings. Adios. Thanks again, George.
Thank you, Dale.